Crude oil noisy after non-farm payroll. Before we start, a quick word from our sponsor. This video is brought to you by FXEmpire, the world's leading retail brokerage firm offering ultra-fast execution and no overnight fees. Look for a link in the description below. The light sweet crude oil market has initially fallen during the trading session on Thursday, but then turned around to rally a bit as the jobs number came in a little hotter than anticipated. Nonetheless, we are looking at the 200-day EMA just above, and I think that will offer a little bit of a psychological resistance. But I had been watching this market very closely as it had uh, been paying quite a bit of attention to the $65 level. It was a previous resistance barrier. And then we spiked after the Israeli-Iran conflict. Now we've pulled back to sit still, and we are trying to break to the upside. So I think ultimately this is a market that will eventually find its way to the upside, and dips should be bought. Brent markets look pretty much the same. If we can clear the $69 level, I think Brent has a real shot to go to the 200-day EMA. This is the same situation where we shot straight up in the air when the conflict began and then fell apart almost as soon as it stopped. With that being the case, you have to look at this as a market that ultimately probably tries to find its way to much higher levels, but I think it's going to be more of a grind. It's going to be more of a typical move, not an erratic one. We won't be seeing big swings like we saw a couple of weeks ago. Nonetheless, I think short-term pullbacks offer buying opportunities in Brent, just like they do in the light sweet crude market. And therefore, I have no interest in shorting. This is the time of year that is typically very bullish for both of these markets anyways. So with all of that being said, I am a buyer. My name's Chris. I work for FXEmpire. If you enjoyed the video, give me a thumbs up and subscribe to the channel for more analysis.